good morning, Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at some more financial results coming out of some of those publicly listed stocks on Trinidad and Tobago Stock Exchange, and we're taking a look at some fairly familiar names to Trinidad and Tobago households. Of course, today we're taking a look at the full financial results for the Ansa McAL Group, or Ansa McAL AMCL, as well as Unilever Caribbean Limited, or UCL. Both groups would have reported improved earnings. Let's see what that looks like and what investors can expect in the coming months ahead. Turning firstly to Ansa McAL or AMCL, well, for that fiscal 2023 period, the group reported an earnings per share figure of $3 per share, a whopping 146% increase from the $1.22 reported in that prior comparable period. Now, revenues were up 10.2% from just about 6.39 billion to just over 7.05 billion, with operating profits up 76.5% from 496 million to just about 876 odd million dollars. Overall profit for the period improving that 123 odd percent from 265.8 million to just about 594.5 million dollars. So certainly an impressive turnaround in terms of Ansa McAL's financial earnings or financial results in that fiscal 2023 period. When we take a look at what would have driven that performance from a profit before tax by segment perspective, some notable changes, one of those being that the banking and insurance segment in that purplish color would have swung from a loss in fiscal 2022 of $20 million PBT of loss before tax to a profit of just over $200 million. Attributable to that, or driving that change, would have been a fairly significant improvement in non-cash mark-to-market unrealized gains for the group. Automotive and trading and distribution in that blue segment down just about 9.5% from 181 million to 164 million in PBT. The construction, manufacturing, packaging and brewing segment up just about 3.7% from 459 to 476 million dollars in that greenish segment. And the media services, retail and parent company segment, consolidated segment, moving from a loss of 173 million in the prior year to just about breaking even in fiscal 2023. Now, when we take a look at Ansa McAL's earnings and dividend history, we can see that it has been fairly consistent from a dividend perspective, with total dividends over the past couple of fiscal years, or related to the past couple of fiscal years, relatively stable at that $1.80 per share, notwithstanding some of that volatility that was related to COVID, of course, highly inflationary environment and other factors which would have led to earnings volatility from fiscal 2020 through fiscal 2023. So overall, a reasonably good dividend story of one of stability for Ansa McAL and its investors, of course. So at a price of $55 per share, the group is trading at, or the stock rather, is trading at a price to earnings ratio of 18.3 times, which is slightly above that conglomerate sector average of 13.9 times, just about 14 times, and offers investors a dividend yield of 3.3%, pretty much in line with that sector average of 3.1%. So with revenue growth in mind, continued acquisitions and geographical diversification, and certainly the group has been pursuing and has been announcing several major acquisitions, joint ventures, and other initiatives which should over time accrue significantly in terms of benefits to investors, with those stable dividend payments in mind, but of course keeping an eye on elevated valuations. Bourse is maintaining a market weight rating on Ansa McAL for the time being. Turning quickly to Unilever Caribbean Limited, or UCL, well, the group would have reported an earnings per share figure of 65 cents per share for that fiscal 2023 period, which was a 75% increase from the 37 cents recorded in that prior comparable period. Revenues were down, however, 20% from 256 million to just about 205 million. Operating profits also down 11.7% from 28.8 million to 25.4 million. Overall operating profits after restructuring costs improved 93% with profits for the period overall improving that 75% from 9.8 million to 17.2 million. When we take a look at UCL, one of its major drivers, of course, has been that revenue volatility, and that does not make for some very consistent reading, given that the group would have been in the process of carving out some of its businesses and disposing of them over the past few years, and that would have contributed in part to some of that revenue volatility we can see over the past 5 or so odd years, and most recently, of course, with revenues falling from that 256 million in fiscal 2022 to 205 million in fiscal 2023. Positively, however, for Unilever Caribbean has been that improvement in its profitability margins, with its gross profit margins returning and in fact exceeding some of its post-COVID levels at around 46% in that orange column. Importantly, its profit before tax margin improving in yellow from 2.1% in fiscal 2022 to just about 13%. So that's a very, very pronounced increase, and of course, above its fiscal 2020 and fiscal 2021 profitability margins as well. So certainly some of the focus in terms of right-sizing the business and focusing on operating efficiency and profitability seeming to have some results, positive results for the stock and its financial performance thus far. When we take a look at UCL's earnings, of course, very volatile, with fiscal 2021 and fiscal 2022 in those red segments, of course, highly volatile, attributable to some of those disposals from some of its key businesses or non-key businesses, in fact, and as well dividends, of course, over that fiscal 2021 and 2022 period, also impacted by the residuals or the gains from sale of those businesses being returned to investors over time. So fiscal 2023 is probably a more accurate reflection of its operating performance going forward, notwithstanding its continued improvements in profitability margins. So at a price of $11.19, UCL is trading at a price earnings ratio of 17.2 times above its comparable sector average of just around 14 times. However, it does offer investors a quite attractive dividend yield of 5% when compared to the sector average of 2.6%. So with lower revenues in mind, however, keeping an eye on those improving margins and that attractive dividend yield, Bourse is maintaining a market weight rating on Unilever Caribbean Limited for the time being. But that's it for this week's edition. For more information, you can give us a call at 226-8773, email us at invest@boursefinancial.com. And of course, you can check out all of our research, which is absolutely free on our website, bourseinvestment.com. And you can, of course, catch this article in today's business section of the Trinidad and Tobago Guardian newspaper. So until next time, stay safe, happy investing, and we'll see you again on the Bourse Report.